All right.
The reality is the economy is creating roughly 250,000 jobs per month. Some months it's going to be a little softer. February was on the soft side, but on average it's 250K. That's 3 million per annum. That's what we created last year. Everything indicates that's what we're going to create this year. Wage growth for individuals is actually accelerating. What's happening is you have a lot of older workers, boomers who are retiring. They're high paid. And then you have a lot of millennials coming in that are young and low paid. And it's driving down the averages, which is what you observe in the BLS aggregate wage data. But if you're actually looking at individuals, their wage increases are much stronger and they are accelerating.
Does that tell you the Fed is further behind the curve than some believe?
No. What it indicates is that the labor market is right on track. I mean, at this rate of job growth, the economy is coming into full employment. It'll be there in a year and a half. Between now and then, wage growth will start to accelerate to a more substantive degree. And if everything sticks to script, the Fed will be raising interest rates by mid this year.
Absolutely. I do think the Saudis had something to do with the decline in oil, and when they feel its time is right, they'll probably try to talk it up. But you've had a huge supply response from companies, laying off people, laying off rigs, renegotiating their contracts. And so realizing that oil is a very cyclical business, we're in a downturn. This is probably a pretty good time to start buying energy stocks and wait for that upturn, which will be volatile, but I think you'll be rewarded for it.
And for those listening on the radio, Schlumberger and Occidental Petroleum are the two energy stocks that you have there on the board.
It's really driven by investor demand. We've obviously investor demand ebbs and flows, but by and large, valuations in the market have been pretty attractive. So it's an attractive place to go and raise capital. And the number of institutions that are looking to continue to reweight into equities, is maintained. Obviously, the US flows into Europe have varied a little bit, but by and large, the equities remain a very attractive asset class, particularly in Europe, where you've got, low rates, low inflation, the fears of deflation are now removed, and notwithstanding the valuations, it feels like they're going to continue to trade higher.